Sheila Patel is the chairman of Goldman Sachs Asset Management. Sheila, it's great to see you today on the ESG Leaders series. At a time when people are saying ESG has reached a pivot point, a tipping point, is that true from your perspective?
From my perspective, the tipping point right now are clients themselves. I think this crisis, the pandemic, has really put ESG in a different frame for clients. It's not a luxury. Social purpose is not a luxury. The same is true of the corporates that we deal with, the companies we invest in. And so whatever people's opinions were before of where ESG fit in their paradigm, today is a moment to professionalize ESG, to see us use all the tools that we use analytically and thoughtfully as investors to adapt that philosophically to our views on ESG and pull that together in a way that delivers to our clients the best solution. But to see clients put it at the forefront, particularly when at the beginning of the pandemic, people were asking whether it just be dropped. We're in a crisis. Can we not think about ESG when we're in the middle of a drama? And the answer was actually no. If there's any moment to realize how essential ESG principles are, and to maybe recognize the S in particular, where people had spent less time, most likely, the time is now. And that's been a great, I think, side benefit of a very unfortunate set of circumstances.
So what about this argument about trying to reconcile sort of the short-termism of the market with the need for long-term investment thinking?
You know, it's ironic. I think the course is long-term thinking. And I see it in every conversation that I have. How can you be extremely short-term when you can't predict when there will be a vaccine or if there'll be a vaccine? How can you be anything but long-term when you have to debate the future of cities, the future of real estate, the future of healthcare? And so these long-term timeframes are actually forcing everyone to rethink how they engage with the market, how they engage with portfolio, how they think about asset allocation, and maybe the way that certain assets fit ever into their investing frameworks. Now, I think many things will come back. I think it's very easy to also get caught up in the idea that every change is permanent. I don't think it is. But I certainly think that we as investors are never very good with the unknown. We love certainty. And if there's ever any moment for us as human beings, as investors, to have to accept some things we just don't know and work through that uncertainty, the time is now.
What's the message to clients at this time?
You know, the message that we've been giving to clients is really about the ways that we can be pragmatic about these questions, right? So as we look at the questions we're being asked by clients, they want to know how to actually act on the ESG questions that they have. What can they do? How can they impact their portfolios? And how does it impact returns? When we look across the broad spectrum of stakeholders, it seems like this is absolutely the moment to figure out how to do that in a more constructive and measurable way. Measuring ESG has been a deficit, I think, in the work that's been done, and it certainly is an area where I'm very passionate. I'm passionate about the data. And when I look at the data we have today on resilience, on sustainability, you see that the companies that have answered these questions well and that have shared their data with us in a way that allows us to do this work have ended up outperforming. A great example is work we've done on employee morale. Of course, everybody's thinking about employee morale while people are working from home. What our data has shown, what our analytics of all the different inputs you can have to measure employee morale, is that actually for over 10 years, it's been indicative of companies that would outperform. So that tells you there are a lot of things we just didn't look at maybe before we didn't have the data. If we can get a consistent standard for us as an industry on ESG data, we can do so much more for our clients.
That's the next question, really. What does the industry itself look like as we get through this?
Well, certainly I'm passionate about the data side, but actually what I think is really interesting about what this crisis has brought to the fore for our industry is how much it will foster change within ourselves. We're not the leaders in everything. We have plenty on the ESG front we can do better. I look, for example, at diversity and inclusion. I think working from home will be much more accepted. I think we've discovered that through video conferences and other mediums, we're seeing more and more people speak up, whether it's women, diverse, young portfolio managers or analysts. And once we're all together in a unique and unknown circumstance, there's nobody sitting at the head of the table. Everybody has an equal seat. And that's driving a very new level of conversation and some great ideas that I think will benefit our investments and benefit our clients. I hope we're able to foster some of these changes, both in terms of what we as an industry offer our employees and what we as an industry offer to our clients because of the diversity of thinking that that kind of environment can create.
Sheila, great to speak with you today. Thank you so much.
Thanks so much for having me.